We have Brent Kessler with me today, and you can learn more about what him and his team are up to. Head over to themoneymultiplier.com. And Brent is kind enough, there is going to be resources there where you can download his book. And Brent, I really appreciate you joining me here today as we talk about the money multiplier method.
Hey, Jack, thanks for having me, man. I'm happy to be on to be able to share with your listeners.
So let's start things off with what is the money multiplier method? That's a mouthful. And what can we learn from it, and how can we implement it?
Yeah, absolutely right. Well, anyway, the concept was driven by just like this thing called the infinite banking concept. And anyway, there's this book here. It's called Becoming Your Own Banker. And it was written by a guy named R. Nelson Nash. Now, anyway, Nelson passed away just a little over, I guess, 4 years now. And it was back in 2019 at age 87. Well, anyway, he wrote that book, Becoming Your Own Banker. And anyway, okay, so in that book, that completely changed my financial life. So I recommend that everybody goes and gets that book. I'm not here to try to sell you that book, but it is a lot of where the material that I'm going to share with you comes from. Becoming Your Own Banker by R. Nelson Nash. The thing you can do is go to our website and get it, themoneymultiplier.com, or go out there to Amazon. But it is definitely a book that you want to add to your wealth building library. And basically, Jack, the thing that it is just going to basically talk to you and tell you about what the wealthy have done in their life to build, keep, and create wealth. In other words, people just like as far as the Rockefellers, the Morgans, the Stanleys, the Barclays. This is how Walt Disney built Disneyland. It's how Ray Kroc started McDonald's. It's how Pampered Chef got started before Warren Buffett bought Pampered Chef. So the infinite banking concept is a concept that allows you to build and create wealth through the debts and expenses that you already have. So the concept will go in and it will show you how to recycle and recapture all of your dollars for everything that you're buying. And I'll just give you a quick example. So let's say, for example, the thing that is going to happen, let's say if you want to go buy a car. Well, so the only way that you buy that car is with this money. Now, there's only one of three ways, Jack, that you buy the car. You either pay cash, you bank finance it, or you lease it, right? Because I'm sure the audience did not steal the car. So they had to actually take the money, they had to give it to the car dealer, and the car dealer gives them the car. They have the money. The transaction is over. Everybody walks away home happy. But by adding this one step in your life, this method, the money multiplier method into your life, not only are you able to get the car, so what you're going to do is you're going to give the car dealer the money, they're going to give you the car, they get the money, you get the car, but now by adding this one step in your financial life, now what's going to happen is you can recycle and recapture that money for the car. So not only do you have the car, but you also get the dollars or the money back. And guess what? If that works for a car, guess what else it works for? Anything, including real estate. I mean, I personally own lots of properties, short-term rentals. I own long-term rentals. I have a few of my own personal houses around the country, and I do a lot of lending on real estate. But before I do any of that lending, before I make any purchases in real estate, I add that one step in my life. I get the money inside of the policy first, and then from the policy, I borrow it out, and now I'm going to go buy the products and services that I'm going to buy in life anyway. And it's keeping that money in a closed system.
Mm-hmm. Yeah, it is kind of an interesting concept. We've had other people on trying to explain this, and you seem to be doing it in a slightly different way. I mean, you even had some visuals there with holding up the $20 bill. Could you kind of go into a little bit more detail based on what Nash initially proposed in his book and what differences you've made to the system? It necessitated you to write your own book.
Yeah, absolutely right. And again, even though I wrote my own book, everything I learned was from Nelson Nash. Nelson Nash was my mentor, so he gets all of the credit, right? The concept itself, and again, it is kind of all right. So the concept is very simple, it's very straightforward. However, our minds complicate it because it's a paradigm shift, Jack, in what we do with money. It's not what people are taught to do with money. It's not what your parents taught you, your grandparents. It's not what your friends, your colleagues, and your coworkers are doing. So it is an outside of the box concept. However, it is not on trial. It's not being tested. It's like, okay, so in other words, it's not like, let's try this and see if it works. No, no, no. It's been around for over 200 years. This is what the wealthy use to build their wealth. So the whole premise of it is the thing that you're going to do, the machine that we're going to use, Jack, to build, keep, and create wealth. I'm about to tell you what the machine is, the audience, what the machine is, and it's going to surprise a lot of them. The actual machine that we use to build, keep, and create wealth is a whole life insurance policy in a mutual company that pays dividends. Now, I know what just happened there, Jack. I just mentioned the word whole life insurance, and about a third of the audience clicked the off button or they totally tuned out because in their mind, what they're thinking is that they know everything there is to know about life insurance, and why on earth would you ever want to use a life insurance policy to build, keep, and create wealth? Well, let me just tell you, because I've been teaching this concept now around the country, maybe on average 55 to 70 live events a year, 150 to 200 podcasts since March of 2012. I've been teaching this concept. And the type of policy that we're using is not any type of whole life insurance policy. It is not the life insurance policy that you can go buy from your brother-in-law that sells life insurance. We all have a brother-in-law that sells life insurance. Even up where you're at in Fargo, North Dakota, there's a whole bunch of people up there that sell life insurance. There's not a lot of people, but there's a lot of people that sell life insurance, right? So it's not that type of policy. This is a specifically designed, specially engineered whole life policy that has high immediate cash value. One more time, high immediate cash value. So what that means, Jack, is when you put money into that policy, you have your cash value available to use immediately. And my definition of immediately is within the first 30 days, which is in the first month. So now the thing that I do is I go to the life insurance policy and I say, Mr. Insurance Company, I want to take out a policy loan. Everything is driven by policy loans. Now, I know I'm going over a lot of stuff, and I know at the beginning of the presentation, you mentioned my website, themoneymultiplier.com. And on that website, I have a full presentation. It's like 90 plus minutes on really peeling back the onion of how the concept works. And I have my examples, my downloadable attachments. But I want to give your listeners kind of the high level to see if they even want to go and watch that 90-minute presentation. But anyway, the thing that I do is I take a policy loan from the insurance company to go make my real estate investments, to go buy my products, my services, my cars, to pay my taxes, to pay employees, for charitable giving, food, travel, entertainment. And when you add that one step in your life, now, Jack, I want you to keep in mind, all I'm doing is adding one step. I do not want anybody at all to change what you're currently doing with money. In other words, I don't want you to change your cash flow. I don't want you to have to work any harder. I don't want you to I don't want you to take any additional risk or lose control. We're simply just adding that one step in our financial life. And when we run the money through the policy first, not only do we get the product and service that we're buying, we're also recapturing and recycling those dollars because the money is in a closed system. There's no money being leaked out to other people. And this is exactly what the wealthy have been doing for over 200 years. So it's not brand new. It's not on trial. It's not being tested, but nobody has ever told us about this. This is not what your financial advisor, your accountant, your lawyer, your CPA is teaching you about money. No, every time that you go and talk to them about money, they're telling you what? Put your money in a 401k, an IRA, a qualified plan. Put your money in a stock, a bond, or a mutual fund. All of that, Jack, involves risk. It all involves risk. See, in a whole life policy in a mutual company, there is absolutely zero risk. Zero risk at all. And the reason is because in that policy contract, it has a guaranteed cash value, and it has what we call a non-guaranteed cash value. Well, the policy can never perform less than the guaranteed side of the column. The non-guaranteed column is how most policies perform because they pay what we call the dividend. Now, even though the insurance companies are not guaranteed to pay dividends, every insurance company we work with has been paying dividends for 123 plus consecutive years without fail. So the thing I tell people all the time, it doesn't matter if you buy the policy from me or someone else, before you sign for it, pay for it, and accept that policy, make sure that policy contract shows you on the guaranteed side of the illustration that it has an increased cash growth, an increased loan availability growth, and an increased death benefit growth year after year, day after day. Today's better than yesterday. Tomorrow's better than today. That's not me telling you that. That is in your policy contract.
So, earlier you mentioned that how we are taught to use money. And a lot of people are going to say that. I think I would imagine it's safe to say that I didn't get this type of training in any of the schooling that I went through, frankly. In fact, a lot of what you're talking about regarding whole life insurance might have been ingrained in us simply because hearing it secondhand, because somebody happened to hear Dave Ramsey mention it on a radio episode. What type of feedback or pushback do you typically see when you bring this concept up?
Yeah, no, great question. Well, a lot of people, when they look at this and I present this, they're like, that just seems too good to be true. How could it possibly work like that? Or why hasn't anybody told me about it? Well, I want you to think about the wealthy people around you or the wealthy people that you know. How many wealthy people are really sitting down with you at the kitchen table or getting on a Zoom meeting or a phone and talking to you how they built, kept, and created wealth? So a lot of the feedback, and again, the thing is I say a lot, I should say some of the feedback, it's too good to be true. And so let me just give you my own, my own example. So I am a chiropractor. I no longer practice chiropractic. I sold all of my chiropractic clinics. I haven't practiced chiropractic since 2008. I had associate docs in my clinics in the Kansas City area. I had 5 clinics. I now live in Port Orange, Florida, which is about an hour east of Orlando, right next to Daytona Beach. I had associate docs in my clinics. I sold the last one in 2017. Well, the very first time I heard this information, Jack, I was at a chiropractic conference in 2006, and there was somebody talking about this thing called the infinite banking concept, becoming your own banker. And I looked at it and I was like, man, that looks really, really good, but it just seems too good to be true. And I'm sure a lot of your listeners have seen things like that. So I thought it was good, but I thought it was too good to be true. So I left that conference and I did nothing at all with it. I did nothing with the information that I heard. I went home, went back to my normal life. I came back to another conference in 2008. There were about 10 or 12 of my chiropractic colleagues that were now at this conference that were at the previous conference. The only difference between them and me, Jack, is they heard the information back in 2006 and they implemented on it. They took action on it. So now I'm at this conference and I've got 10 or 12 of these guys and gals. They're going on and on, basically throwing up all over me. They're saying, Brent, Isn't that banking concept the most powerful thing ever to pay off your debts and your expenses in order to take your money, recycle, recapture? They were going on and on about how this was working in their life. And I thought to myself, there's no way 10 or 12 of my colleagues are lying to me. Maybe one or two, but not 10 or 12. So I went home. It was February of 2008. And I went home and I told my wife. Now, my wife is a very analytical person. She's a nuclear engineer. She's got a master's degree in nuclear engineering. She helped design the nuclear reactor for the Navy sub. So every I is dotted, every T is crossed, right? So talk about skeptical. I went home and I told my wife, I said, honey, we have to start implementing this concept in our life. And it was at that time I was $984,711 in debt. That's what I owed to the third-party creditors, almost $1 million. How was I in that debt? I had my student loans from chiropractic school, the house that I lived in. I had a condo on the Lake of the Ozarks between St. Louis and Kansas City, an airplane pilot. So I had an airplane, right? So it didn't take me a lot to become in debt, like about $1 million. I was able to take this concept. I was able to put it in place just like I was taught. And I was able to pay that debt off in 39 months, 3 years and 3 months. All I did was added one step to my financial life. I didn't change my cash flow, work harder, take any additional risk, or lose control. Well, I became so passionate about this, and because of just the stuff I was doing in my own life, that, again, I won't take you through the whole backstory, but to fast forward, I started teaching this. So March of 2012, I started teaching this concept to others, and that's what I've been doing. So I eat, live, and breathe this stuff almost every day of my life. I personally have over 7,000 of my own clients in every state of the country. And the thing I love most about my job, Jack, more than anything else, is on those clients, nobody's ever mad at me. People do not get mad at you when you're helping them build, keep, and create wealth. And if I do have anybody that's mad at me, they're keeping it a secret and they're not telling me about it. So we are actually changing the financial lives of people. And they had no idea that this even existed. They knew something like this had to exist, but they didn't know what it was. Now, the last thing I'll say before I turn it back to you is, if you think about this, Jack, there's us and the super wealthy. There's us and the super wealthy. We all have access to the same financial tool. The only difference between us and the super wealthy is the super wealthy use those tools differently than we do. Now that I know how to play the game and what they've been using for a couple centuries now, a couple hundred years to build, keep, and create wealth, I'm just using the tools that they use. So, like, there's a guy, and his name is Warren Buffett. And maybe you and a lot of your listeners have heard of Warren Buffett. And here's what Warren Buffett said. I don't know exactly when he said it, but I heard it for the first time in October of 2008. And I think about this quote every day of my life. And what Warren Buffett said, he said, if poor people would just start doing what rich people do, they wouldn't be poor anymore. How much sense does that make, and how simple is that? And that's all we're doing, is we're using the tools of the wealthy. And it doesn't require you to be wealthy to do this. I have people that start policies for $100 a month, and I have people that start policies for $540,000 a month. You get to pick your number. You pick where you want to start, how small or how big. We never tell you how to start or what number to start with.
So just to remind everybody, it's called themoneymultiplier.com. And as always, I'm going to make sure to have that as a shareable link in the show notes, or a clickable link in the show notes. So check your podcasting app for that. And if you found any value in what we're talking about so far here today, do us a quick favor and share it with one of your investor friends. So Brent, I'm going to put you on the spot here for a second.
Okay.
Because, we're talking about a pretty grandiose concept. And this sounds, like you said, too good to be true. but we need to kind of constrain this a little bit. And let's give everybody a quick example of how this works. If you wouldn't mind, if you're prepared for it, we'll say that I'm trying to acquire a house for 100,000. Let's just say the purchase price, for easy math, it's $100,000. I need to do 20% down. Now I'm going to be looking at my whole life insurance policy, be my own banker. I'm going to pull this 20% from somewhere. Could you kind of give us kind of a rundown of how this would work?
Yeah, the high level based on that example was on a $100,000 house, what you need is $20,000. So the thing that you do, first of all, you put money into the policy in order to get you to $20,000 of cash value in the policy, because that's the amount you need to have down on the house. So now you put the money in the policy, you take a loan from the general fund of the insurance company. Now, the cool thing about this is when you borrow from the insurance company, keep in mind, you're not borrowing your money, which is a great thing. So all of your money that you put in the policy is still growing and compounding, and it's compounding in a guaranteed tax-free growth rate environment. And the government is completely out of your hair. And part of the presentation, I show you how you can borrow at a higher rate than the money that you're earning and make money all day long. So that's embedded in that presentation. But the thing you're going to do is take the $20,000 out as a policy loan. You're going to go put the down payment on the house. And then if you choose to pay yourself back, which you should, because the thing you're going to do is pay the bank back. If you borrow money from the bank, the thing you're going to do is you're going to pay yourself back the money that you just borrowed. And that money continues to go back into the policy, which is going to continue to increase the cash value growth in the policy. On top of that, as far as the policy dividends, and it's all growing tax-free. And at the end of the day, not only do you have your $20,000 down payment that you got, that you paid towards the house, but you're recapturing and recycling that money. And then eventually, just because of the example that you gave me, there's an $80,000 house mortgage. So you owe somebody else that $80,000 mortgage. Well, that's all going to get worked to gradually into the policy to where now that debt is no longer a third-party debt. That debt is owned and controlled by you. And the loan never has to be paid back. The insurance company will never ask you why you want to borrow the money, and they'll never ask you if you plan on paying it back, because they don't care. Because you, Jack, remember what the vehicle is. It's a whole life policy in a mutual company that pays dividends. They don't care if you pay back the policy, or they don't care why you use the money, because that policy has a death benefit associated with it. And it's not an if, but it's a when. You are definitely going to die, pass, or graduate. Whatever word you like to use. I like to use the word graduate. It's not an if, it's a when. The death benefit is always higher than the cash value, always higher than the loan availability. So at the time of your death, what happens is that is the total death benefit will pay off the policy loan, because they've already given you that money while you're living, and the rest of your money will go to your beneficiaries tax-free. So essentially what we're doing, Jack, is we're using our death benefit while we're living instead of waiting to die, pass, or graduate and pass it to someone else. It's a beautiful thing.
You've mentioned a couple times now the dividend and that it grows. Could you kind of share with us a little bit of how it sounds like you're using different companies, so this answer probably is going to vary depending on the policy, but what could somebody expect for the money just sitting there?
Yeah, well, hopefully if this is something that somebody wants to do, I'm going to be their agent and they're going to do it with me. See, I don't get paid from you guys. You guys don't write me a check or my company a check ever. Every service that we offer, that is all included in everything, that all of the policy services, our plan designs, we call a money multiplier map, which you'll see on the presentation, the cash flow analysis you'll see on the 90-minute presentation. That is all service that we provide you. I get paid one way only. I get paid the same way your car insurance guy or gal gets paid. For example, if you go to John Smith, the Allstate man, to buy car insurance, the check that you write is not to John Smith. You write it to Allstate, and Allstate writes John Smith a check, okay, for commission. So I get paid a commission. The commission I get paid is not determined by you, the customer, and it's not determined by me, the life insurance agent. I'm licensed in every state of the country. The insurance company determines that. So you are right. There are a few different insurance companies that we use. There's 5 companies in total that we use, because remember, the policy is not any type of life insurance policy you can just go ask about. It's that specially designed, specifically engineered whole life with a high immediate cash value. It has a guaranteed growth rate in the policy, and then the dividends are above and beyond the guaranteed growth rate. Every insurance company I write with, they're all great companies, but there may be a company that may perform better for you based on your specific situation. Because because the thing is, maybe you're at a certain age, maybe you're at a certain health status, maybe you live in a certain state, maybe it's a child's policy, right? So that would be the reason we may want to use one versus the other. But eventually what will happen is you will have more than one policy and you will come back to do more. Over 7,000 clients, 91% of my clients that have been with me a year or longer have more than one. 70% of those come back before the first year is up because they see how effective this is and how efficient that we work with them. So I design your policy exactly like I designed mine. The only thing that may be different is the amount that we're putting into the policy, but the policy design is going to be maximized for your immediate high cash value. So there's no secret sauce that I put on my policy that I don't put on yours.
So I'm hearing that if people would like to have an idea of what that growth rate could be, it's best to go to your website and look at that material.
Yeah, exactly. Go to the website. You can send me an email, Brent, B-R-E-N-T, at themoneymultiplier.com. And then the thing, okay, so like the very first thing you want to do is watch that recorded presentation, because it is a paradigm shift, or hop on a Zoom call or a podcast where I go over the presentation, or even go to our event calendar and it shows you all the locations that we're speaking at live around the country. So then the thing is, once you watch that, you're probably thinking, okay, I got to know a little bit more about how this will work for me. Then it's real easy. All you're going to do is schedule a strategy call with our team, and we will go through and answer your questions on how this will work for you and your individual financial situation. There's nothing that we're selling. We're not asking you to buy anything at all. We never, ever ask you to buy anything, but hopefully, if you like the concept, the thing you have to, in order to do this concept, you have to get a life insurance policy. Well, that's where I come in. Ding, ding, ding. That's me. Hopefully you buy the policy from me and our agency. Not that you have to, but hopefully that's what you do. You come to us because we're the ones that are going to give you all the tools and the resources and design the policy and design like your money multiplier map. I know you don't know what that is because you haven't watched the presentation yet, but after you watch it, that is what we provide you, that constant ongoing service at no charge 3 to 4 times a year.
You know, going back to the other example, and we're going to be kind of cutting some of this a little short here at this point, but you said, I'm going to need to pull $20,000 to purchase this $100,000 house. Can you give us an idea on average how much money would I have to put in order to qualify to pull the $20,000 out?
Sure. If you want to get $20,000 out of a policy immediately, and remember my definition of immediately is within 30 days, you're going to be able to access anywhere from about 55 to 88% of your cash value. Okay. So let's just, and again, it's kind of hard for me to do 20 in my head. So let me do 100,000 because I can add that up in my head easier. So in order for you Okay, for example, let's say if you $100,000 into the policy, in order for you to access, okay, so again, I'm sorry. Okay, so the amount that you're going to be able to access is anywhere between 55,000 and 88,000 immediately. All the money is yours. You just can't borrow a dollar, okay, in the very first year. The second year, the percentage is higher. To the third year and beyond, it's dollar for dollar, and every year after that is more than you're putting in. So depending on just exactly what's going on in your financial life, maybe you do a policy where you only get 55% out immediately of what you put in, or maybe you do another policy where you get 88% out immediately of what you put in. There's pros and cons to both of those styles of policy. But if you really need as much of your cash value as possible, you can access 88% of it. And even if I went one step further, which I don't want to confuse everybody, if you do what you call a dump in the policy, then you can access about 96% of every dollar that you put in the first year. But again, there's pros and cons to designing those policies in those different ways. Lots of things we have out on our website. We've got if you go to our website, we've got over 70 plus videos. A lot of those videos will explain that. The guy that I wrote the book with, Chris Naugle, just go to chrisnaugle.com, follow his content. He's got tons of stuff. My daughter, her name is Hannah. She's 23 years old. She has the Money Multiplier podcast, over 60 episodes out there as we speak today, recording one every single week. So there's lots of resources, lots of information. The more you get around the campfire and drink the Kool-Aid, the better it gets. But to answer your question, it could really be up to 95 or 96% of the dollars that you put in can be borrowed out within the first 30 days.
Okay, great. I appreciate you telling us that. And then one last question, and this is let's try to keep this one a little shorter, is that, I've run into quite a few, even local real estate agent, or not real estate agents, insurance agents who throw this term around right now. And I'm not exactly sure they even know the concept they're trying to sell. Could you give us the top 3 questions we should be asking to make sure we're dealing with somebody who actually knows what they're talking about?
Absolutely. So here's what's going to happen to some of your listeners, or if they go to my webinar or they see me at a live event. The thing they're going to do is they're going to say, "Oh yeah, Brent, I've heard about that." Okay. So the thing they're going to do is go to their agent or their brother-in-law that sells life insurance. And they're going to say to them, "I know how to do that. I can teach you how to do that," right? That's what the agent's going to tell the potential client. Well, here's the thing I would ask. I would say, well, if you know how to do this, why haven't you told me already? Where have you been, right? Because they don't really know. They just know the book. If you really want to know if they understand, ask them these 3 questions. Question number 1, have them show and prove to you how you can borrow at a higher rate than what you're earning. They don't know how to do that. Have them show you how you're going to recycle and recapture and get all the money back for every car you're going to buy, drive, and own for the rest of your life. So not only do you buy the car, but you also get the money back, or any product or service for that matter. They don't have a clue. They don't know. And number 3, ask them to show you, or to create and design for you, what we call is a money multiplier map. Now, when you watch my presentation, you'll see what that is. They have no idea how to do that. They don't know. Now, let's say they do know, and I'll make this quick. Let's say they do know. Even if they know, they're very hesitant and skeptical to design your policy this way. And here's why. In order for the agent to design your policy exactly the way we've been talking, that agent has to take a 60 to a 90, a 60 to 90% cut in their commission, and they're not willing to do it. They are not willing to take that cut in the commission, so they won't even share the concept with you.
Well, Brent, this has been really eye-opening. I appreciate you giving us the time. One more time, it is themoneymultiplier.com. And now we're going to close things out with some rapid fire questions if you're ready for them, Brent.
I'm
But
ready.
we're
Let's
going to
do
have
it.
to keep the your answers like under 60 seconds if we can.
Got it.
Here's your chance to bust a real estate investing myth or insurance myth. What would you like to bust here today?
Well, the thing is just to do your own due diligence, man. Don't take advice necessarily from other people. Sometimes what you have to do is even your friends, like we tend to take advice from our friends and our family members. And how many times do people tell you, well, that's not a good investment? What, a whole life insurance policy? Why on earth would you ever want to buy a whole life insurance policy? That's the worst thing you can ever do, right? Well, normally the advice you're taking is from somebody that's broker than what you are, right? Or even it could be a family member or a coworker. And I tell people sometimes, they say you have to sometimes fire your friends. Sometimes you even have to fire your own family members because they will drag you down. They will drag you down, and it's negative, negative, negative. So I'm telling you, find yourself. Okay, go out and do your own due diligence. Go talk to other people that are implementing it in their own life. I had a mentor. His name was Joel Bauer. And Joel Bauer wrote this book. And I think the book was called something like How to Win Friends and Influence People. Joel Bauer said this, and he taught me this. He says, it's not about what you say about yourself. It's what other people say about you. So I would go out and see if there's something you're looking at, a deal that you're looking at, a person you want to work with. Don't take what they say. Go look and see what other people that they're working with are saying about them. So don't just take what people say and say, oh, well, they're saying it, so it must be true. No, usually it's not.
Do you have a book recommendation for everybody outside of your own, of course? And you're not allowed to say Rich Dad, Poor Dad, and Think and Grow Rich.
Yeah, well, I'm a big Zig Ziglar fan. Zig Ziglar taught me, and I teach this to people. And this is what I live by. So anything by Zig Ziglar. And so the thing Zig Ziglar taught me, he says, if you help enough other people get what they want, you end up getting what you want. So I was put on this earth to serve as many of God's children as possible. I need to be a good listener. God gave me 2 ears and 1 mouth, so I should be listening twice as much that I talk. I'm still learning how to do that. I still haven't mastered that. And then the other book that I would recommend is a book called Who Not How, basically by Dan Sullivan, but it was written by Benjamin Hardy. Great book called Who Not How. And anything that, like, if you go and can read anything on Austrian economics by anything that has to do with Austrian economics, get a hold of those books. But also, like with Zig Ziglar, I just love his teaching and his material.
Yeah. What is one tool you can't live without, whether it's personal or business?
One tool that I can't live without? Oh my gosh, I can't live without an open mind. I have to be open. There's a chapter in this book that Nelson wrote called The Arrival Syndrome. And what Nelson talks about is that everybody thinks they know everything about a certain subject, and they've got a closed mind, and they're not, and so they're not open to learn anything new. You've got to keep an open mind because you never know, as far as the stuff that's going on. There's so much stuff that people don't know about that they think that they know about. So I always say mindset, number 1. Number 2 is systems, have a good system. And number 3 is have a good mentor. Whoever is in that system that you're looking, have a good mentor. I like to think of myself as I am a mentor. That's what we call ourselves, as money mentors, money multiplier mentors. And we have myself and other mentors on our team. And what we do is we mentor you in building, keeping, and creating your wealth. We're helping you to break the bonds of financial slavery that you don't even realize you're in. I don't care if you make $10 an hour or $10,000 an hour. Everybody needs to break those bonds of financial slavery and take control of their own money and their own wealth.
Well, Brent, this was a great conversation. Is there a question or concept you wished I would have asked you here today?
No, I can't think of anything, off yeah, I would just say, probably the last thing I would say is, again, I've taught my kids this. I have one son he's going to be where we're at. This year he'll be 35. And then I have a 23-year-old daughter that's very active in my business and teaches this concept just like I do. And then I have a son that just turned 22 last week that is a jet airplane pilot. And the thing I've always tried to teach him is the thing I want you to do, kids, is I want you to watch what the masses of people are doing. Watch what everybody else is doing, and you go do the other thing, and chances are you're going to be way better off. So do not follow the masses. Most of the time, that's not where you want to end up. You do not want to end up with the masses. You want to be in that top 1% or 5% in anything that you're doing. In my life, it's basically the world of finances. I want to be in the top 1% of wealth, like builders, wealth earners, not just from a money standpoint, but a lot of it does come from like a money standpoint, because even though the late Jim Rome said that like money is not everything. It's not everything, but it's right up there with oxygen.
Well, Brent, this was great. One last time, themoneymultiplier.com. Find that link in the show notes. But Brent, this was a great conversation. I hope you'll come back again sometime.
Absolutely, Jack. I'd love to be back, and I appreciate you allowing me to be on to share with your listeners.